Ladies and gentlemen, I'm making a big claim in this video, a controversial claim. I believe it is in the best interest of Bitcoin on a cyclical level and in the best interest of market participants if Bitcoin closes the monthly and yearly candle below 42,000 US dollars. Now, the reason I'm making this claim is because I believe that if Bitcoin does close above 42K, we are hence doing a less favorable thing that could actually damage the reliability of Bitcoin on a long-term scale and damage the cyclical structure, which could hence damage our ability to make profits on Bitcoin. So I hope Bitcoin closes below 42K. I'll present the evidence as to why I think that's necessary, and I'll present the counteracting evidence as to why Bitcoin might close above it, including ETF, including daily chart analysis, including things like weekly chart, golden cross. Lots to look into, big claims to make. Guys, let's get into the content. Today, I'm going to be assessing the probability of Bitcoin closing above 42K on the yearly candle and also the monthly candle, because obviously the end of the month means the end of the year, considering it's December, and the damage that would do to the Bitcoin structure. Now, you heard me right when I said that. I said damage. I do not think that closing this yearly candle above 42K would be good for Bitcoin. I'm very much of the opinion that just because something is up, it doesn't mean it's good. Now, I do hold slight reservation when I say this because of the ETF decision, but we'll discuss that at the end of the video after we've gone through the content I need to get through. Let's start by looking at what Bitcoin has done historically, and let's start by kind of pronouncing and articulating the claim I'm making that I don't think it's good if Bitcoin closes above 42K, right? So, look, first and foremost, yearly chart. All right, first and foremost, this chart here, as you can see on the screen, displays Bitcoin's last kind of two cycles, and so we've got three whole cycles here. What we've done from the all-time high to a break of that all-time high, and we can see that we do have a preliminary trend forming that takes roughly 1,100 days for Bitcoin to break above its previous all-time high from the start of the bear market, right? That's our rough estimation. That would bring us to around November or October next year, by the way. That's when this preliminary trend would suggest Bitcoin breaks its all-time high at 70K, October, November next year. Obviously, there's room for error there because it's only 2 data points, but that's the overall trend. We are basically on track for that. Okay, we've been tracking the previous cycles quite well, which does actually support the preliminary trend, does actually support the claim that we'd be breaking all-time high around that time period. We do notice, though, where we are deviating a little bit too high right here. Right, this screenshot was taken about a week ago, and we haven't moved much in price since then. We are deviating a little bit too high for my liking, above where we're kind of meant to be, I suppose, if we're going to follow this trend. And that means the Bitcoin would kind of be good to see. It would be good for Bitcoin to see a correction or at least some consolidation for about 100 days to bring us back to the baseline of where we're meant to be so that we can break all-time highs around the predicted time frame of October to November next year, right? Because I want to make something very clear. We've done with that chart now. We know that Bitcoin is slightly overvalued. We want to see a correction or sideways. That doesn't mean we need to see it, but it means we definitely want to see it. I want to make something very clear, though. It is in our best interest for Bitcoin to remain as predictable as possible on a cyclical level, because predictability is what makes money, not price movement. Bitcoin going to $500,000 over the next 2 months wouldn't make more money than Bitcoin doing what is predictable as per 4-year cycle. I know that sounds ridiculous, but it's true. It's actually true, right? People get scammed, they get wrecked. People think they want things to happen when they actually happen. They don't make money from it, right? The fact of the matter is, if you have the evidence to support a predictable trend, predictable actions on what Bitcoin's going to do, what crypto's going to do, that's when you make the money, right? You don't make money by random volatile price movements. That's not how money is made, and that's a fact. So we want Bitcoin to be as predictable as possible. And with this said, we know that Bitcoin now is deviating a little bit, right? It's not really crucial at all. It's not, detrimental, but it is deviating a little bit too high. We want Bitcoin to remain grounded. So correction or consolidation, that's what we want. And we also can look at trends to suggest that Bitcoin should be doing that if it's going to follow the last 2 cycles, right? So, for example, yearly candle. The yearly candle trend, and this is the yearly chart right here, kind of, it might offer an overly reduced, overly kind of diluted view of Bitcoin, but it does actually quite well articulate what the 4-year cycle is. You can see we have 1, 2, 3, 4 candles there. That's the first cycle. 1, 2, 3, 4 candles here. That's the second cycle. And then 1, 2, 3. We're in the middle of the third cycle right now in Bitcoin. And as you can see, basically the second candle of each cycle is a red candle, right? It precedes the bull market, and the third candle is a green candle that kind of half encompasses the red candle, right? It did it in the previous occasion here. It's the accumulation period of the bull market, of the cycle, right? Or the kind of the bounce period of the cycle. It's what happened. We had like a green candle that encompassed half of the red candle, another one in 2019. And given the fact that we know cyclical trends exist, we know we're following the cycle vaguely, we should be doing the same thing around this cycle here. The problem is our green candle is getting a little bit too high, and it's getting to the point where it's almost fully engulfing the previous red candle. And so if we close this yearly candle above 46k, we will fully be engulfing that red candle, and that would be a point of deviation from the prior cyclical trends. Now, obviously, this is by no means a strong cyclical trend. It's by no means detrimental to the 4-year cycle if we close the green candle above the red candle. But if we have the objective or the preference of maximizing, right, cyclical predictability, we want every single micro trend, whether it be big, small, whatever, whether it be important or not important, to remain predictable. And so it would be ideal, it would be in the best interest of us as investors to have this yearly candle close below 46k, so it doesn't engulf the previous red candle, which we've done, which we haven't done on previous occasions, so that we can form a trend that can be useful in the next cycle. So that's one data point saying it would be not ideal at all if Bitcoin closes above 46.5k. But there's another trend that says we shouldn't be closing above even 42k, and this is where we get into the bulk of my claim. And this is a much more precise, much more reputable, much more respectable, quite frankly, trend. This is based on the Ichimoku cloud. Sorry, I've gotten flamed in the comments a few times for mispronouncing that. The Ichimoku cloud baseline, okay, on the monthly chart. Look at this red line. Look at what it does on the screen in reaction to Bitcoin price action. Look at when we're above it being in a bull market, right? When we're below it, we're in a bear market. This is a very, very major thing for Bitcoin. And you might notice a few things. We know that Bitcoin works cyclically. And you notice that when we broke above this Ichimoku cloud baseline in 2016, it was May 2016. When we broke above it in 2020, it was May 2020, right? So that's a preliminary trend forming there. Now, if we're extending that trend, we should break above this Ichimoku cloud baseline in May 2024, which means that this should basically be the peak until May 2024, just after the halving. On top of this, if we're looking at 2019, the same part of the cycle we're in currently, 2019 was the same part of the cycle as the mid-cycle just before the halving, just like what we're doing right now. We came up to the Ichimoku cloud, we wicked above it, but ultimately we closed right below it and saw our pre-halving correction only to go upwards after the halving. If we're going to follow what we did in 2019, which would be ideal, again, we're trying to maximize cyclical predictability. We're not trying to maximize gains on Bitcoin because we know that doesn't compute into gains for us personally as it is traders and investors, for most people at least. We're trying to maximize cyclical predictability. So we would actually want Bitcoin to copy 2019, to close below 42k, okay, and correct downwards until after the halving in April, and then break above it in May and start our bull market from there. That is what we want to see. Now, if we want to see a close below this Ichimoku cloud baseline, that means we also want to see a close below this previous red candle on the yearly chart. So overall, what we can say is that it is ideal for us if Bitcoin closes below 42k on this monthly candle, and hence as well, since it's December, the yearly candle. That would be the ideal thing for Bitcoin to do. I personally do want Bitcoin to close below 42k in December. I want that to happen. That is what I would see as ideal. Now, to be precise, 42.2k. That's what the Ichimoku cloud is. I want Bitcoin to close below the Ichimoku cloud at 42k, and I want Bitcoin to break above it again in May next year, just after the halving. That is what I want to see. Now, the problem is, right, just because I want to see something doesn't mean it's going to happen. We have things like the weekly candle golden cross, okay? So this is a moving average kind of event that occurs, I suppose. Golden cross is the bullish variation, and then death cross is the bearish variation. We've never seen a weekly candle golden cross before in Bitcoin's entire price history. We don't necessarily know what the effect's going to be. We have a reason to believe it should be bullish. And that is coming in before the end of December. So that could be the thing that pushes us decisively over 42k and makes us close above it. But golden crosses and death crosses, it's worth noting, are actually not very reputable for their accuracy. They do work most of the time, but on the occasions they don't work, it actually ends up being a non-event or an opposite event, which we actually go downwards massively, at least looking at 3-day chart for that. So that's an interesting thing. That kind of adds a bit of tension to this close, right? Because obviously if we want to close below 42k in December, but we have a golden cross event for the first time in Bitcoin's entire price history ever, that is occurring before the end of December, that could ruin that for us. Also, if we're looking at short term, we have a couple of interesting things here. First and foremost, we have an RSI triangle, but that shouldn't be ending until late January, so we have no necessity to break that before December. But what we do have is a price trend, right? We have our major resistance zone as of right now in pink, which is our local high at 44.6k. And we can see we have a major support line that's kind of building us up to that level that we reached an apex on the 29th of December, just before the end of the month, meaning that Bitcoin will either break upwards above 44k and head towards 48k before the end of December, or it will break downwards and decisively go below 42k before the end of December. So that's an interesting thing as well. So we want to close below 42k, right? This month and this year. But we know that we have major events happening in TA that will cause volatility, such as the golden cross on the weekly candle, and such as this kind of formation forming on the daily chart, for example, that's going to break before the end of December. That could throw our wants out the window. It could just break Bitcoin to the upside. Alternatively, it could confirm Bitcoin's break of downside. But we'll have to look into what it will do, I guess, closer to date when we get more data. Personally, I believe it's leaning more bearish at this point in time. There are multiple indications of exhaustion, but this is when we get into what I want to discuss as well. So we know that Bitcoin, it would be ideal from a cyclical level, and I think most people would agree with this, unless you're consumed by greed, to be honest, that Bitcoin would close below 42k this month and this year. That would be the ideal scenario. We do know there are a few things that could throw it off, such as the weekly candle golden cross, such as the daily chart pattern. A break of this local high, for example, would send us quite upwards definitively towards 48k. There also is another thing that throws a bit of a spanner into the works, and that is the ETF decision. The ETF decision obviously could lead to very dramatic price action on Bitcoin. However, it's very important to note there's no confirmation at all that an ETF approval would lead to upside break on Bitcoin, because the immediate effect of an ETF approval, okay, would not mean that the ETFs are available to buy instantly. It would just mean that they're approved. And so the hedge funds would still have to set them up. Right, I want people to understand that very quickly. Right, when an ETF is approved, right, if they are approved, it's likely they are, that doesn't mean they're immediately available for buying. Right, so there's going to be no immediate buying pressure based on ETF approval. The only buying pressure that will come from an ETF approval is from market participants who are not using the ETF, who are using exchanges to buy Bitcoin basically out of hype based on the news. And I would argue that the people who are buying Bitcoin based on the ETF approval have already bought Bitcoin based on speculation of the ETF approval, and it's already priced in, right? Yes, the ETFs will give long-term buying confidence to Bitcoin, and there'll be lots of, for example, big whales, whatever, buying through ETFs. Sure. It will definitely give buying momentum to Bitcoin on a long-term scale, but it will not be immediate. It will not give an immediate-term buying pressure. The only immediate-term buying pressure would come from regular market participants who are already very well aware of the ETF news and probably have bought in expecting it, right? So I would actually say that the ETF approval is just as likely to be a sell the news event as it is to be a buy the news event. I want to make something very clear in that regard. So the whole speculation that, when ETFs are approved, Bitcoin's going to skyrocket to 70k, right, in like 3 days. It's like, no, that's actually not logical at all, because most of the people who are already looking out for an ETF approval have already bought. Let's be honest, right? So unless the ETF approval directly happens at the same time as ETFs being made available to buy, we know they're not, right? We know that's not the case. That would be the only scenario in which Bitcoin would go upwards massively on an ETF approval and sustain above that price level. So that's an interesting thing, I guess, counterpoint that people have made to me of that, don't worry, the ETF approval is going to send Bitcoin out of the cyclical theory, it's going to pump Bitcoin massively, it's going to destroy the cyclical structure. I actually don't think there's any real evidence to support that at all, and I don't even think the logical speculation supports that. Yes, the long-term buying pressure would be very much supported because of the ETFs existing, but we have to remember the 4-year cycle is a date range trend. It's not particularly predicated on price points. It's not particularly predicated on gains and losses. And so in saying that, there is a slight contradiction I'm making to myself. In saying that the 4-year cycle is not really based on price points, you could argue that, well, why am I so concerned about Bitcoin closing below 42k in this monthly and yearly candle? Just because it's not concerned with price points at the moment, it doesn't mean it can't be concerned with price points in the future. And I would argue that things like the Ichimoku Cloud baseline on the monthly chart is not necessarily concerned with price points, because the moving average, it's a moving average, right? So it kind of falls in line to cyclical returns and diminishing returns. It's actually more of a variable indicator, right? It's versatile. So, all right, so I'm kind of running myself in circles here as I talk, but I hope you're understanding the point of what I'm saying. The point of what I'm saying is, if our objective is to maximize cyclical predictability on Bitcoin, which it should be, right, we want to be closing this monthly candle and yearly candle below 42K. That would be the ideal thing for it to occur for Bitcoin. And there are a few things that could prevent that from happening, like the weekly chart golden cross and like the short-term price action. We'll have to monitor those things, but I really want to get this point on the table. It is ideal for Bitcoin to close below 42K this month and this year. Guys, with that said, thank you for watching. I hope you enjoyed. Check out the VIP group on Telegram. We do direct altcoin trading signals with entry requirements, stop loss suggestions, and target suggestions, right? Take profit suggestions. All the information about the Telegram group, including our historical trading results in a PDF format and also our 14-day free trial membership information, is available on this Telegram group, which you can find a link to in the description below. Again, if you want to make money on altcoins, this is the place you can do that. Now, obviously, if you're trading, you're buying, you're selling, whatever you're doing, staking, you need an exchange to do that from. The Bitget and Bingx exchanges are my two favorite exchanges. Bingx is global non-KYC, and Bitget is global minus the USA KYC. So depending on your preferences and geographical location, you can choose one of those. They've both got exceptionally low trading fees. They're both very secure. They've never been hacked before, and they have protection funds in case they are hacked. So check them out with my referral links below. 15% trading fee discount is available with my referral link, and also exclusive rewards and bonuses. So that's in the description below as well. And then finally, if you want to learn how to trade, you can do that with the Crypto Academy's Become a Trader course. This is a course developed by myself and Megawell Crypto, who's another YouTuber in the cryptocurrency space. Check his channel out for sure. We developed this course teaching people how to trade, essentially. It's a pre-made course, so you can buy it and you can do it in your own time whenever you want. It'll take around 30 hours to complete based on the average estimates we made, 30 to 40 hours for the average person. If you're doing it from Unit 1 to 10, and Unit 1 to 10 all have different topics. They've all got different amount of slides, videos, worksheets. We've got a full detailed description of what the course is, so you can read up about it before you buy, and you can also ask us any questions and request payment information via our website email address. So guys, thanks for watching. Hope you enjoyed, and I'll catch you in the next video. Cheers.